Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest, somebody who has a lot of experience in markets, cryptocurrency, covering the economy as a whole. I mean, if you've seen his YouTube channel, it's absolutely blowing up. His name is Mark Moss, and he really helps people position their finances and wrap their minds around how to be successful in the markets. And so I highly recommend you check out his YouTube channel. His name's Mark Moss. You type it in, it'll come right up. Mark, thank you so much for coming on Crush the Street with me today.
Yeah, you're welcome, Kenneth. I appreciate you inviting me on. I always love to talk with other people about the markets and what's going on.
Well, you finally agreed to come on the show. We've reached out a little bit. I'm like, man, I'd love to interview Mark, and you came on. So I'm super grateful that you did. Mark, let's just kind of start off with, how you see the world right now. I mean, 2020, my goodness, we're in quarantine. The U.S. is on fire. The national debt is exploding. We have this situation where, we might have $4 or $5 trillion deficit in 1 year, when it took over 200 years to get to $10 trillion. I mean, my goodness, it seems like a lot of things are happening here in 2020. And, I'd like to get your thoughts on where we are right now.
Wow, that's such a massive question to dig into. It's like
take it wherever you want.
Yeah. Well, what I would say is that while a lot of people might be surprised as to what's happening, it's actually very predictable. And so what I mean by that is, and if you watch my YouTube channel, my favorite thing is I go back in history. So I always go back in history because I believe history unlocks a lot of what the future holds for us. And, history doesn't always repeat, but it rhymes. And so we can go back and we can study civilizations for a long time and really like the economies of those civilizations. And it's very telling as to where we're headed. So the Roman Empire is a great place to go look. And we can see that the Roman Empire basically is kind of what the U.S. is, right? Where it started as just like a little country, but then as they started their empire building, they needed more money. They ran out of money. So what did they do? They inflated their currency. They went from a 100% silver coin to a 90% silver coin, 10% more, and then 80%, and then 70%. And over 200 years, they devalued their currency, 90%. And in order to continue to expand the empire. And all the problems they had are the exact same problems that we're having. And so we're in, stage 5, stage 6 right now, which is capital control. Like we're almost into this capital control law area. So like all these things that are happening are things that we've seen happen over and over and over again. You debase the currency. You continue to open up the gap between the rich and the poor. That leads to divisiveness. That leads to social unrest. Social unrest happens. Governments continue to get more and more strict and do what they can to maintain power, which only makes the social problems worse. And then eventually it falls apart. And we've seen it play out 100 times. We are watching this play out in real time right now in other countries. So I know what maybe I said might be shocking, but like I said, we've seen it play out hundreds of times. We're watching it play out in other countries right now today. And this is the way it goes. And the reason why is because human nature is pretty similar. We're all kind of the same. Most people want to just kind of take care of ourselves and our friends and family and have a little bit of money left over and whatever. And we can take a lot. We can take a lot. We can get pushed and pushed and pushed. But ultimately, so that's human nature. And ultimately, we're done getting pushed around and we want to fight back. But also, some people want to control other people. And you see it in the PTA at your school. You see it in the homeowners association in my gated community. You see it on the local level and all levels. And some people want to control. And so the power wants to continue to expand. And they're going to take 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 until finally the population pushes back. And so, like I said, we've seen it hundreds of times before. As a matter of fact, I was in Mexico City about a year ago, and they have these insane pyramids that you can go out and check out. And I love history, so I love going and check out these pyramids. And these pyramids are unique because they're almost perfect. They were left 100% intact. And the reason why they were left intact is because the whole village or whatever abandoned them. And the reason why, the quick story is, basically you had back then, you had like the ruling class, which were the priests and the warriors, and then you had everybody else. So a ruling class and everybody else, kind of like what we see in these other countries, kind of like what we're starting to see in the United States. And what happened is they went into a drought. And the priest said, hey, we need to do human sacrifices in order to get the rain. Let's start sacrificing children. They started sacrificing children. No rain. More children. No rain. More children. No rain. Finally, they're out of children. So the priest said, hey, warriors, give us your children. The warriors said, hell no. And they killed all the priests, and everyone abandoned the city. And what's important about that story is this was thousands of years ago, but how relevant is that even for today, where the elites, the ruling class, take until they can't take anymore. The people get tired, they overthrow it. And anyway, so that's a big, really, really, really big macro picture of where we're at in the world today, if that answers your question.
Yeah. Well, and when you look at the political divide in our country, it really feels like we're like we're in a relationship on the brink of divorce. There is no trying to reason with each other. We just attack one side and the other, and there is no room for understanding. There's no room for discussion. It's just this attack for each other where both sides don't want to understand and meet in the middle. And I don't know, maybe we're at that point where we're more divided as a country than ever. And where does this ultimately go? I mean, it's just utter dysfunction. I can't imagine opening up a restaurant in downtown Austin right now with any sort of confidence that, hey, I'm going to be able to successfully do it, without potentially being locked down, rioting. I mean, there's no appetite for me to want to do that and invest in a conventional business at the moment. I don't know, maybe some thoughts on that.
Well, yeah, definitely a lot of thoughts on that. I mean, for sure, you're right. We're more divided than we've ever been. Why are we more divided than we've ever been? Well, partly, especially now more than ever, the media. Oh my gosh, shut them off. Like really, like all they want to do is just stoke this divide. But it's not just the stoking. There is an actual divide. And part of it really goes back to the change in kind of like the economic system and the education system. But really, you have whatever you want to call it, left and right. But really, it's conservatives versus progressives. And the big difference is, as I kind of said, majority of people just like, let me just live my life. Let me just make my money. Let me take care of my kids. That's all I want. Just leave me alone. Let me make my money. If I have a little bit left over, let me enjoy myself. Right. That's it. But then a lot of people want to tell you what to do. And that is the divide. So what happens is what I still think is at least part of the majority, they just want to live their life. They want to be left alone. Let me worry about myself. But then so there's all these people, like myself included. Let me just live my life. Let me just be by myself. But then you have all these people like, these laws aren't for me, they're for you. And we see this, especially with the COVID thing and then the riot thing where like, all these like mayors and stuff are saying you can't leave your house, but then they're out going and doing it. There was the mayor of Chicago. If she said, if anybody leaves your house, they're going to be arrested. If you leave your house, you'll be arrested. But yet she was out going and getting her hair done. And she said, well, I care about my hygiene. And so I need to get my hair done. It's like, you don't think other people care about it? So what we have is maybe on the left side, and I hate to categorize people, and this is why the divide is you really can't have a conversation about it, is because they want you to be better. Hey, the environment's going to be bad. You need to quit polluting. Never mind, I'm flying on my private jet everywhere. No. It's not for me. It's for you. You need to be better. You need to sacrifice. Whereas I'm like, I'll sacrifice for me, but you worry about you, right? And so that's why the two are just, they can't reconcile. Now, where does that move forward? Obviously, it's a downward spiral. So as you've already made the case, how could you invest money into a restaurant when you don't know what the rules are and the rules are constantly changing? So snap of a finger, the government says shut down, right? Snap of a finger, people come destroy your business, but that's not illegal anymore. And they just allow them to do that. And you can't operate like that. And so it only is going to exaggerate things, right? So less people opening businesses, less revenue, which makes the problems even worse, which means less people open businesses. And it's like a downward spiral. It's like a doom loop, we can call it.
Mark, that's the fundamentals, right? That's how people really feel, and that's what's happening on Main Street. But we have a situation where the government is going into trillions and trillions of dollars more debt, and the Fed is essentially bailing out the economy, expanding its balance sheet, and the stock market is going up. So we're talking about fundamentals, but when you look at what's going on Wall Street, there seems to be a disconnect. And one thing I've told people is, if you believe that the government is going to print trillions of dollars, you have to be open to the fact that it might flow into assets and might go into the stock market. So I think we're seeing that. But I mean, it just seems like the divide between what's happening on Wall Street and fundamentals is also getting bigger.
Sure, the markets are completely broken. They're completely disconnected. I've made a few videos about that. But yeah, it's completely disconnected, right? I mean, we have 40 million people unemployed. We have experts are saying 42% of jobs won't ever come back. We have this environment where, as in your hypothetical example, people don't even want to open businesses, but yet the stock market is pumping to all-time highs. And the stock market, you buy equities, you're supposed to be buying like, future revenue of these companies, but they don't have any revenue. They're going out of business, right? So there's this disconnect. And I think, we've been kind of trained to think that the market is the economy, but the market's not the economy. The economy is where real goods and services are produced. The market's like a casino where people just go bet. And so we've had this disconnect. And so that's why the market isn't following the economy. But also, as you said, the Fed printing trillions and trillions of dollars. And it's not that people think that's going to happen. It is happening. It's happening right now. I made a video about this where, basically the Fed is buying stocks in a roundabout way through these special purpose vehicles, and they're buying the bonds and this and that. But the Fed is propping up the stock market. And why? I mean, they're bailing out the richest people in the world. They're bailing out hedge funds. They're bailing out hedge funds, but yet I can't get any bailout because I make more than $100,000 a year. So I get zero. So I get nothing, but yet the hedge funds, the guys with billions of dollars who don't really need the money are getting bailed out. And so, that obviously leads to more social unrest. Absolutely.
Well, let's talk about, your thoughts on the stock market then. Do you believe this is sustainable, or is it essentially a hedge against inflation? I mean, if you believe the dollar is just going to continue to get printed, is owning stocks and owning the overall equities, is it a hedge against that printing press?
Well, so and you're basically talking about asset prices are rising, which means our dollars buy less, which is what's happened over the last 100 years, which is why the poor get poorer, because the poor don't have assets that go up in value. So how do we hedge against that? How do we protect ourselves against that? Yes, definitely stocks going up can help prevent that. The problem is that the market is completely broken, meaning I don't have any signals to invest in. So typically I would look at the fundamentals of a company. I would say, okay, this company, they make these products. I see the future that these products are going to be in more demand. They're very capital efficient and they should have this much profits coming back to me. Yes, that's a company I'd like to invest into because I can believe I get returns later. Problem is that doesn't work like that anymore. Now companies are just going up in value for no reason. So me as an investor, how do I invest into that? There's no rhyme or reason why companies are going up. Companies that are losing billions, tens of billions of dollars, see their stock going up, right? And so it makes it very difficult for us as an investor. But unfortunately, we have to keep betting in the casino because, as you said, we need to hedge against that inflation. And so, stocks is one way to do that. They're pretty dangerous. I think, obviously, gold is another way to do that, precious metals. Bitcoin, I think, is a way to do that because as the money gets printed, this inflation, it just makes the existing dollars worth less. And so we need to find ways to hedge against that. And I think those are all ways that you could do it.
You mentioned gold, maybe silver as an extension. What are your thoughts on, and I know it's tough to put a price point on anything, especially in these broken markets, but what's a comfortable, not a level, not a pie in the sky number you'd say for gold or silver, but like what's a realistic target that you would, in fact, hold your gold still, hold your silver if it got to, you know what I mean? If it not just like, oh, it went, silver went to 500 or 1,000, or maybe you think it's very possible, but a realistic target, if it got here, I'd be very happy and I'd actually still hold it.
So I'm going to say something pretty controversial right now that might be to a bunch of people listening, but I don't put gold and silver in those buckets together. So you kind of mentioned them in the same breath. I don't see gold and silver being the same thing. Gold is a chaos hedge. Gold is money. Gold has been used for 5,000 years. Central banks are buying more gold today than ever before. Central banks are not buying silver. So for 5,000 years, gold and silver worked together. They were used in the same breath because gold was for big denominations, silver was for small denominations. In the late 1800s, we started using gold certificates. We no longer needed silver. The silver's usefulness as money went away once we started having paper gold certificates. Then it was demonetized by the United States. So people say, "Oh, it's in the law of the land." Well, no, it's not. It was demonetized. So I think silver has a huge upside in front of it? Definitely. Do I think that buying silver at these low prices today could make us a lot of money? Yes. However, the fundamental reasons why we'd buy gold and silver are just different. Gold is going to go up because it's an inflation hedge. Silver will go up based off of speculation and keeping somewhat of this historical ratio to gold. That being said, you want me to put a price on it, and I'll play along. So what I see happening is if we look at the 2008 financial crash, we see that when the stock markets crashed, gold also crashed along with it. In about 7 months, the stock market was down about 50%, gold was down about 25%. So gold did better, but they both went down. The big key difference is that the Federal Reserve response to the crash was to print a bunch of money, right? Put a bunch of money in the market. And that is why gold goes up. So once that money printing started happening, gold shot up. And gold got back to its previous high in 7 months. It took stocks almost 6 years to get back to their previous high. But gold didn't just stop there. I think at the bottom, it was about 680. I think it was 680 at the low. And it went all the way up to about $2,000 in 2011. So if we look at the size of the response, the Fed put in, $700 billion in TARP plus a little bit. So call it $1 trillion they put in. So $1 trillion of stimulus pushed gold from 680 to 2,000. Now we have 7 trillion of stimulus, 7 times the stimulus. So you could say, well, gold could go up 7 times higher, but let's not say that. Let's just say it goes up just as much. So we'll be conservative here. Let's say it moves just the same as it did from 2009 to 2011. That would put gold at almost $5,000 an ounce. On the same.
That's interesting and that's powerful. And I appreciate that analysis. Actually, I haven't heard it broken down that way, which is great. So, Mark, given that we're in this bull market. I mean, we bottomed out at the end of 2015 in gold into 2016, and here we are in 2020. Many are saying we might be in the 4th or 5th inning of this bull market, but we also know that the biggest gains tend to happen in the bottom of the 9th, 2 outs. So maybe you could speak to that a little bit.
Well, I mean, obviously we don't know what the future holds. And if we had a crystal ball, it would make investing so much easier, but we don't. I think, so I look at gold as really insurance. It's insurance on my portfolio. So if everything goes to hell, I have my gold, right? And so really the big move in gold is if everything falls apart. And so really, if for gold, to go from 2,000 to 3,000, that's nice. I mean, that's a nice gain, but we can get stocks that can do way better than that. The big move is going to be if, and I'm probably not really if, but when the fiat currency finally ends. And I don't know when that's going to be, and nobody does, and it can happen a lot faster than people think. So really what's probably going to happen is we're already starting to see it, right? People lose trust in fiat currency. And when people lose trust in fiat currency, the game is over. And no military can force you to use something you don't trust because no one's going to accept it from you. We see this in Venezuela. There's dollars or paper fiat all over the streets. People didn't pick it up. So the only way to restore trust in a currency again would be to back it by something solid again, like gold. And so I think at some point, all trust in fiat currency is done. And I don't know if that's a couple years from now. But at that point, they're probably going to have to revalue with something. Gold, we know the central banks are buying more gold than ever before. So a lot of countries have gold in their central banks. And if they try to revalue it to gold, it could push gold to $10,000, $20,000, $50,000, $100,000 an ounce. So that would be a massive move. However, you would never go back to dollars because dollars would be done at that point, right?
Absolutely. Yeah, and
So
this is separating out what your previous example of a repeat of what happened in 2011, because we didn't really see a societal breakdown or a complete fallout of the dollar at the time. This is barring that.
Well, yeah, I mean, the period from 2009 to 2011 was only a small blip in the 1971 till whenever it all hits the fan in 2100 or whatever, right? So so we went on this like 60 or 70 year fiat experiment. Right now we're about 50 years in from 1971 when we got off the gold standard. So we're about 50 years in, and so that 2009 to 2011 was just a little blip in that journey. But I think eventually fiat currency fails. We know this because all throughout history, it's always failed 100% of the time. And whether it's one or two more years or 10 more years, we don't know. But I think it's just we know that markets don't move up in a straight line or down in a straight line. And so there will be several ebbs and flows. The dollar will get stronger, the dollar will get weaker. But overall, the trend is it's getting weaker. Overall, the trend is that we're losing confidence. There's a really cool website. I don't know if you've ever seen it. And anyone who's interested, I should check it out. It's called WTF 1971.
I haven't.
It's basically a bunch of charts, and it shows what's happened since we got off the gold standard. It's WTF happened in 1971.com. WTF happened in 1971.com. And it's a series of charts that show from 1971, look what's happened. And so we're in this period, this continuation period, and we just don't know when it ends.
That's really powerful. And, I guess the last follow-up to that before I ask you a little bit more about Bitcoin is, what's your thoughts on the U.S. being the cleanest shirt in a basket of dirty laundry? And I say that because, when you travel around the rest of the world, I mean, there's a lot of broken economies. I can't imagine, different countries, honestly, any other country or even Europe, Europe's crumbling in many ways. And so many of these countries are just so far down the rabbit hole of the same, but in a worse infrastructure, arguably, to be able to surpass the U.S. And so, and I mean that in the sense that the U.S. is what backs the dollar. So there would have to be another country that comes around that usurps the U.S., which then pulls the rug out from under the dollar. So what are your thoughts on that?
Sure. Well, like I said, at some point the trust is gone. And so
but then where do you go?
Where do you go when the trust is gone? You're absolutely right that the dollar is the best currency in the world right now. It was a little bit of a bait and switch where 1944, the Bretton Woods Agreement, the U.S. says we're going to back dollars by gold, and then all the countries of the world pegged their currencies to the U.S. dollar, so everything was pegged to gold. In 1971, President Nixon severed that tie and kind of like bait and switch, and all of a sudden all the currencies weren't pegged to gold anymore. They're just pegged to the dollar, but what was the dollar pegged to? The dollar's pegged to nothing. Now, when confidence is lost, what happens after that? Again, I don't have a crystal ball. If I had to guess, at this point, what I would say is that we probably see, so like the IMF keeps something called SDRs, special drawing rights. They're baskets of currencies. And so different countries based off of many different factors get a percentage of their currency in this SDR basket. Of course, the US dollar is the biggest percentage of that. And I think at some point the SDRs might become money and the SDRs would be backed by gold. That might be something. Another option could be like, I really hate to say this. I'm old enough to have kind of grown up in the Cold War era. But if we look at like Russia at this point, they have the best balance sheet in the world. They have very strong surplus. They have massive amounts of gold. That could cause a problem. I know China has a more, maybe more gold than anybody in the world right now. There's rumors that they have maybe over 20,000 tons of gold, and they could come out with a gold-backed currency. So potentially we might see one country do it. We might see a couple countries join together and do it. It could be based off of the IMF. So I don't really know the answer. If I had to guess, and we don't know this, but I bet you the U.S. doesn't really have much gold. And so the U.S., I believe, has probably spent most of the gold trying to defend that gold window and before they severed it. And so if some countries got together and revalued based off of gold, the U.S. would probably be left out, at least out of a big piece of that.
Mark, let's transition to Bitcoin. You already alluded to it, sound money with what's going on with the Federal Reserve. What are your thoughts on Bitcoin specifically? I mean, we hit $10,000 and then, we saw the floor fall out from under it, moved down $1,000. We're big fans here of Bitcoin and some of the top cryptos. What are your thoughts and kind of what's the future for crypto looks like in your opinion?
Man, Bitcoin is difficult to understand because it's so many things. It's so many things to so many different people. But I do believe that I believe in it. I'm a huge believer. It's what gives me hope in the future. Honestly, to say that it's what gives me hope in the future. It's what could eventually pull us out of these problems that we're in right now. I think, Bitcoin is digitally scarce. It's the first digital scarce asset we've ever had, which is the scarcity is what gives things value. That's why like something like gold that has a finite amount or at least a low inflation rate holds value versus dollars. They just print 7 trillion out of thin air. They don't. And so I believe that Bitcoin, there's pros and cons. I believe in, if you add everything up, it's superior to gold in many aspects. There are things that I like about gold that are a little bit better. For example, I could hand you gold personally and there's no record of that. But for the most part, Bitcoin is like digital gold. And so it's a way for us to take our vote and opt out of this financial system. Hey, I don't want my money in this rigged system anymore. I'm going to take it out and I'm going to put it over here and it's out of the system. I can put it into Bitcoin just like I could put it into gold. I think as far as you just mentioned, the price shooting up to 10,000 and then dropping down $1,000. Yeah, it happens. And that's because Bitcoin, I believe it will be a really good store of value in the future, but that doesn't mean it is today. I would say it's like looking at a 5-year-old LeBron James. And you see this little kid and the parents are like, man, he's going to be the greatest basketball player in the world one day. And I'm looking at this little 5-year-old kid and I'm like, no way he is. And that's kind of like people looking at Bitcoin right now. And people go, Bitcoin's no store of value. Look how volatile it is. Yeah, it's totally volatile. How does it get off of $0 to $10,000 without volatility? A new asset has to go through price discovery. So it's finding a market. And it's a small asset that moves very, very, very fast. And as it gets bigger, the volatility goes down. And eventually, right now we're in this collectible phase. And eventually enough people collect it, enough people value it that then it can move into a store of value. So like we've seen over like the last decade, the billionaires, they've all moved to collectibles. They're collecting art, they're collecting cars, they're collecting all these things. My friend here has 2 old Shelby Mustangs, and he bought them for between like $30,000 to $50,000 each. And one of them's worth $1 million and one of them's worth $2 million now, because so many rich people have started putting money into collectibles. So Bitcoin's kind of like this collectible. Eventually it's worth enough money where it can be a store of value. So I don't know. Does that sum it up enough?
That was a great description. 5-year-old LeBron James. I'm going to actually use that going forward here when people talk to me about Bitcoin. I try to explain that, gold, something like gold has had 5,000 years for people to attempt to discover its price, even though I think it's still undervalued. I mean, something like Bitcoin, it's just been introduced to the world. So, Mark,
one thing I'd say about that, just to add on to that real quickly though, is, we hear, so many arguments about why Bitcoin won't work. And the 5-year-old LeBron James is a good one, but also, as far as like, they say it'll never reach full scale adoption. Nobody's going to use it, blah, 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 all these things. Right. And I made a video on my channel, how Bitcoin gets to $100,000. And I made a case that Bitcoin can get to $100,000 easy without ever needing to get to mass adoption. So for example, gold is not mass adopted. Most people don't even own gold, yet it's a $10 trillion asset. Most people don't even have it. Most people, no one even use it. No one's buying Starbucks coffee with gold. The offshore banking sector is about $40 trillion. But that's not mass market. Does everyone have an offshore bank account? Do you know anybody who has how many people do you know that have an offshore bank account, right? But yet it's $40 trillion. Now, why do people put money into offshore banks? To get it out of their current banking system, right? And so, well, that's just like Bitcoin. I can get money out of my banking system. So if I could just take 10% of that offshore banking system, I don't need mainstream adoption. I'm talking about 10% of offshore banking, which who even does that? 10% of gold, who even has that? And you can easily start getting up to $100,000 Bitcoin without mainstream adoption, without full scale.
I love it. Mark, I want to appreciate you for coming on the show. Thank you for your time. If people want to learn more about you, the work you're doing, please let them know where they can go and what they can expect to find.
Yeah, so I'm super. Most of my content's on YouTube, so I do a couple videos a week on YouTube talking about these types of topics, macroeconomic stuff, why the system's breaking down, and what we should do about it. So that's the best place. Follow me on YouTube, watch those videos. I'm pretty active on Twitter. #1 Mark Moss, just the numero uno, and then Mark Moss. And then I do write some subscription newsletters based off of these things that we see. So watch some of the videos on YouTube. If you like what you see, you can jump in and learn more about me.
Thank you, sir. Thanks for coming on the show.